This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm so much more comfortable collecting real estate than I am collecting other stuff.
This is the Collecting Real Estate Podcast. Paul Moore, thank you so much for being here this morning. Really excited for this show. I know you're an author, experienced real estate investor. I think we first spoke on the BiggerPockets website. Love to hear more about your background and how you got into real estate.
Yeah, well, I started out with an engineering degree, which was my first mistake. But then I went to get an MBA after that, went to Ford Motor Company for about 5 years, had my own staffing company for about 5 years around Detroit, and sold that to a public company in 97. And I kind of just wandered in the wilderness for a couple of years after that. Then my buddy and I started flipping houses for fun. Then we got serious about it. We flipped probably 50 or 60 houses over the years. Started flipping waterfront lots, started building houses from the ground up, which was a big mistake for a guy who didn't know how to tighten his own doorknob of his house. But that was me. And then we did a subdivision. And during that whole time, I was trying to figure out how to get involved in commercial real estate. I knew a lot of the wealthiest, most successful people in the world were involved in commercial. I didn't know where the on-ramp was. I didn't know how to get in. And eventually, my buddy and I built a multifamily quasi hotel in North Dakota for the oil rush there in 2010 through 15. And we ran that, and we did another one next door. He went on to do a Hyatt hotel after that, and I jumped into commercial multifamily and eventually expanded into self-storage, mobile home parks, and other types of investments.
Wow, a lot to unpack there. I like to get a bit of context when I hear these things. So, around what time did you start with the flipping houses, and in what market was this?
Yeah, this was in a small town in Southwest Virginia. It was the year 2000. We bought our first house on the courthouse steps. We actually went just to view an auction. We didn't even take a checkbook or anything. Like, we didn't have any money to buy a house intentionally, so we could just watch it. But we were the only ones there, and that it was a screaming deal. So we ran and got money and came back to the auction, and we bought the house, put it on the market, and like with a for sale by owner sign, and got a full price offer within 4 hours. Now the crazy thing about this is we were this was a market that had 21% unemployment. It was a textile and furniture town in Southern Virginia. It was called Martinsville, and we we just got very, very fortunate for our first deal. The next several were not anywhere as easy, and we switched to the Roanoke, Virginia market.
So, was there anything that gave you the aha moment or anything that inspired you directly to go to those courthouse steps and become a real estate investor that day?
Yeah, my friend was he had worked in maintenance for years on apartments, and he had just moved to the area. He didn't have a job yet, so we were just trying to figure out something to get him launched into a career. And then I it turned out that I loved it as well.
Okay, I need to take a step back here. Why did you say an engineering degree was a mistake?
Well, I don't think it's a mistake for everybody, certainly not at all. I just didn't know who I was. I mean, if I would have known who I was and what I should have been doing, I mean, I never would have got an engineering degree. It just wasn't a fit for me personally. I took me years and years to realize I should have been more in the marketing, copywriting realm, something like that.
So, who is Paul Moore?
Yeah, I'm somebody who passionately believes in anything I do, and I go to extremes to promote it and to get other people excited about it. That's what I've done in every arena I've been in, and that's I like to leave the technical stuff and all the the architecture and the blueprints and all the detailed construction stuff to somebody else, and I like to focus on the promotion side.
Yeah, real estate is one of those things that once you get involved, it seems like you have an endless task list, endless amount of things you can be doing if you really want to do it to the best of your ability. you can buy the property, then you can manage the property, then you can market yourself and your company, and maybe that includes something like writing a book, and the list just goes on and on. I know you recently wrote a book about self storage and your experiences in that area. Can you tell us more about that?
Yeah. Backing up a little bit from that, in 2016, I wrote a book on multifamily, humbly entitled The Perfect Investment. And love multifamily still, but the perfect investment's not perfect if you can't find deals that make financial sense. And we couldn't find deals that made sense. At least my company couldn't. So we expanded from there into investing in other people's deals. We put together a number of funds and we invest in self storage, mobile home parks, multifamily, light industrial, and RV parks. And part of that, during that research time of jumping into that, I realized there's hardly any good books written about self storage, even though it's a massive industry. It's got 53,000 self storage facilities in the US, which is about the same as all the Subway, McDonald's, and Starbucks combined. Yet I couldn't find any great books about it. So I went ahead and wrote my own book. It's called Storing Up Profits. And I wrote that and published it through BiggerPockets Publishing. And it came out last November. There's basically three parts of the book. The first third is the reasons why we love self storage and why we love investing in self storage. The middle part is how to invest in self storage, four different paths to building an empire. And then the last third of the book is seven paths to get into self storage or any kind of commercial real estate. From wherever you are, if you want to get into commercial, those seven paths could take you there.
It's exciting. Publishing a book with Bigger Pockets has to be a rewarding experience going through that whole journey with them. I've always been interested in self storage, but starting my career in the past couple of years, I feel like I missed the self storage rush. I feel like I came a little late to that party. Is it too late to get into self storage?
So it is and it isn't. So I could take you to Nashville and drive you around and show you why it is extremely overbuilt with self storage. And that's just one city of many. We've seen it everywhere. But I could also take you to southern Nashville to places like Bellevue or Belmont that are completely underdeveloped and undersupplied, I should say, for self storage. And so there are definitely pockets to get in still. Uh, One thing I will say is that if you get a value add self storage or a mom and pop self storage that has a lot of intrinsic value left on it, a lot of meat left on the bone, from an operator who didn't know or care or have the resources to really upgrade it and maximize income. If you can buy that and use some of the techniques that professionals use to upgrade and to make a great park or a great self storage facility, man, there's tremendous opportunity in any market at any time if you can do that.
Some of the benefits I hear is that usually the rents are lower, so you can have a higher increase, a percentage increase when you raise rents. And you're also not going to get as much pushback because they're not living there. They might see that increase in a letter in the mail, but it doesn't hit the same way as increasing your home rent. Another way I hear is that if there's land that's not being used, that can be used for whether it's boat storage or a different type of storage, and a lot of different ways to increase that bottom line. Are these some of the ways that you increase the potential with these mom and pop storage facilities?
Yeah, that's absolutely right. The rents are typically, you'll talk to these mom and pop facilities. I talked to one very large one the other day, and they said, "Yeah, we've only raised rents four times in 28 years." I'm like, "What?" And we're full. I'm like, "Yeah, I'm not surprised you're full." The amount of potential with something like that is almost hard to believe. Think about it. If I'm renting you an apartment for 1,000 a month and I raise it 6%, you might move out rather than pay that extra $60 a month, $720 a year you're locking in for. But if I'm renting you a storage unit for $100 a month and I raise it by 6%, well, you might be irritated, but you probably won't take a weekend, rent a U-Haul, pack up all your junk, excuse me, your treasures, and move them down the street just to save $6 a month. And so it's much easier to raise rents once you've got a tenant in there. We call that having a sticky tenant. Now, the impact of raising rents is pretty incredible. In residential real estate, we all know it's valued by comps or comparable properties, but in commercial real estate, it's valued by math, and the math works like this: the value or the value increase is the net operating income or NOI increase divided by the cap rate, which is the rate of return. So if we can increase the rents or therefore the net operating income, let's say by 25%, well, that increases the value of the whole facility by 25%. So let's say you paid $1 million for a self-storage facility and you can raise the rents and occupancy. And let's say you can raise it by, with rents and occupancy, 30%. Well, if that 30% value increase, that translates to 300,000 above the million, instead of instead of a million, it's 1.3 million. But if you only have 400,000 in equity in that, let's say you got 60% debt, your 400,000 in equity just went up by 75% just from raising rents. You just got a 75% ROI, return on your investment. And that's before you did all the boat storage, the RV storage you mentioned with the vacant land. That's before starting to sell retail items like locks, boxes, tape, and scissors. That doesn't include, adding U-Haul out front where you can get a commission that could, you know, raise your income even more than I just said from that. So there's all kinds of things you can do to add value.
That was a really good explanation of how you increase value in self storage. Thank you for that. I like how you say it's all math and it's not emotional. I love multifamily investing. It's what I do every day. But there is this emotional part to it, whether it's a granny who's behind on rent and you're in the middle of winter in New York and it's hard to know what to do in that situation. You don't have that with self storage. It's a lot more numbers based, a
Right.
lot less emotional. You
Yeah, that's
mentioned
very true.
sticking with the math, you mentioned back when you were looking for multifamily deals, you couldn't find any where the numbers made sense. What were some of the key metrics that you were looking for, some of the opportunities that you couldn't find?
Yeah, so we wanted to be in multifamily in cities that were, half a million or more. So one huge shock to the economy, one big employer shutting down wouldn't mess up the whole, city. We wanted to be in places where there was net population migration, incoming people, growth in population. Of course, you want to see that in anything you're involved in, including self storage. We were looking for assets that were, underpriced, that had a lot of upgrades that could be done to increase value. We were looking for assets that were above about 80 units so we could afford a full-time maintenance person and a full-time property management manager on site. Those were some of the things we were looking for. And again, we were having a hard time. 93% of multifamily above 50 units is owned by companies that have multiple assets, but about 50% of self storage is still owned by mom and pop owners, and up to about 85 or 90% of mobile home parks are owned by mom and pop owners. So, again, they often don't have the desire, the resources, or the knowledge to, increase income and maximize value.
It makes it a lot easier to find a deal, but also to get a hold of these sellers. I know trying to cold call when it's a property that's 50 or more units in multifamily, it's hard to get a hold of those owners. And if you do, good luck getting them to give you even a chance to put in an offer compared to a mom and pop owner who's usually willing to at least hear what you had to say, hear an offer.
Right. That's true.
So you mentioned selling your business to a public company in the early parts of your career. How has that helped you in your real estate career?
Yeah, it gave me the freedom. It gave me an asset base to start from, a couple $1 million in the bank. And it also reminded me, that I really want to make this as simple as possible. I mean, that company there was a lot involved in running that company. And I, since then, have really wanted to simplify, have less staff to rely on, less, I don't want a business where every single thing, including the things that are not in my control, every single thing has to go right to make a profit. And that's why I like buying these value add mom and pop deals, because you only need a handful of things to go right. Even if the economy, let's say the cap rate goes against you, interest rate goes against you, if you can start from a position of such strength because you're buying these with all this intrinsic value left, in the property, like you said, let's say they have, oh yeah, we have this extra 6 acres out back, it's not worth much. Really? Okay. Well, if you can add boat and RV storage, I mean, you could potentially double your income. Well, I mean, if you can double your net operating income, but the cap rate, going back to our formula, expands from, let's say, 5% to 6. Well, okay, so that's a 20% decline in the value of the property. But if your top line, your NOI, your net operating income in that formula increases by 50%, well, that 20% hurt that you just experience won't ultimately really crush you.
So what happens if these mom and pop owners get a hold of your book and learn all these secrets?
Here's what's happened to mom and pop owners. That's a great point. Um, they have realized that the value of their facility has effectively doubled in about 5 or 6 years. And that's by them continuing to be mediocre. I mean, honestly, many of them they don't want to put the effort in. Not all, but many of them don't want to put the effort in and the money in and the capital, the intensity to go after all these changes to really increase the income and the value. So, yeah, I don't think that's going to happen on too wide of a scale, because like they knew their property might be worth 2 million several years ago, because that's what they were getting offers for. Now the cap rate has compressed, let's say, from 10% to 5% on their property, and people will offer them 4 million or even more on their property now. They are really, they're sitting pretty already.
So even though they know they can put in some extra work and improve that value, they don't feel the need to.
Often that's the case. That's exactly right.
So you mentioned part of the reason you love real estate is the ability to not have to have everything funnel through you. It gives you a lot more freedom than this first business. Do you currently leverage any outside assistance or any type of systems or software that make your day-to-day life a lot easier?
Well, I'll just tell you that our whole business model is set up so we don't acquire, get the debt, or property manage or asset manage any properties at all. So, our company, Wellings Capital, we go out and look for the very best operators we can find, and then we invest heavily with them. We raise money from lots of individual investors, and we invest in all these individual operators, and those operators go out and find the deals. And so that's what has made it, that's the best thing we have done. And that gives our investors a huge advantage, because they don't have the time or the knowledge or the resources to go out and do due diligence. Yesterday, we were at a self storage operator in Houston, and they said in 21 years in business, no one has ever done the level of due diligence we have before we're willing to invest with them. And, the questions we were asking, the background checks, the reference checks, all the stuff we were doing, people just don't do that. And so, very likely that our investors won't find that Houston self-storage operator on their own. So what we're doing is we're giving them this insight, this due diligence on all these operators. We're also giving them a diversified portfolio of different types of assets, different operators, different geographies, and of course, different specific properties within this portfolio.
That's the beauty of a fund. They trust you and they know that you'll perform and find the best operators. Can you give an example of some of those questions that you might ask during due diligence?
Oh yeah, absolutely. We got 28 major issues we want to cover with them. We want to find out, what their moral compass is. What do you do when the chips are down, or what do you do when you're faced with a really hard decision? And more importantly, why? Why would you do it? We know they're going to say something good that they would do. The guy in Houston yesterday, he ventured off onto a side gig and he actually got involved with some investors in some car washes, and they were losing 30,000 a month for years. And he personally wrote a check for that 30,000 a month for all those years. He never asked the investors for a dime to fix that because he said it was his problem. And so that's one question we ask. We like to see how they treat their employees, how they talk about their investors, their spouse, the waiter at the restaurant. We want to find out, how they get their debt, what their view of leverage is, what their highest LTV they would take, and why. Do they lock in long term low interest rate debt, or do they take a gamble and are they getting high LTV floating rate debt? Do they qualify? Do they have the liquidity and the net worth to qualify for Fannie and Freddie, agency debt? Um, we try to find out, how they're acquiring their properties. Tell us about your acquisition strategy and your team to do that. How do you property manage? Do you outsource or do you do it in house, and why? So those are some of the questions we're looking to get answers on.
A lot of value there. I think those questions are applicable across the board from multifamily to self storage. Really, really good stuff. You mentioned asking how they handle a loss. It sounds like your career has been a lot of wins, but I know even the best all star teams, they lose eventually. Have you had any losses throughout your career and how did you handle them if you have?
How many hours do you have?
We
No,
got about 15
seriously.
minutes.
Okay, seriously. I had a podcast for years called How to Lose Money, and we explored painful losses and setbacks on the way to the top with 238 investors, entrepreneurs, and business owners. And so that show, How to Lose Money, is just it really reminded me that almost anybody, I really would say everybody, who has gotten to the top has had painful losses on the way. Some of mine include investing in mobile homes. My worst investment of all time was 4 mobile homes I acquired over the years. One turned out okay, the other 3 were disasters. But you said, but I'm talking to myself now, but Paul, you said you invested in mobile home parks. Yeah, I love investing in mobile home parks. Self storage and mobile home parks are my favorite investment. Investing in a park is investing in dirt and infrastructure. It's entirely different than investing in a specific mobile home and renting it out. And so that's been one of our big setbacks. Another was in multifamily. We had a deal where the underground pipes were corroding, and we didn't know it when we acquired the property. And that cost us a lot. And that was a painful setback. And we've certainly had more. I've had a number of waterfront lots and house flips over the years that, didn't make a profit. But sometimes it's one of the things we learned from the How to Lose Money show was you got to learn to cut your losses and move on and learn from it.
I really like that idea of a how to lose money show because even the best investors have lost money and it's something different and everyone can learn from those losses. Is that still a running show?
We pulled the plug on it about a year ago. We decided, man, we have heard every way we can think of to lose money, and so many of the stories sounded similar from, especially from the 2008 era. And so we decided to start a new podcast, and so we moved on from that.
I'm going to take a look at that. Is there any, can you give us one lesson that you've learned from summarizing all of those shows together?
Yeah, I'll tell you too that we're like a pair of lessons. One is you got to learn to cut your losses early and move on. In my proof text for that would be a time we started in North Dakota. We were doing that amazing housing project. We started a wireless internet company on the side, and that was a huge mistake. There was so many problems with that, and we tried really hard for years, but it cost us, I mean, I think we lost about $400,000 and years of hard work. If we would have just realized in the first winter when the radios were the wireless radios weren't working in the 40-degree below temperatures, that we should have just cut our losses. I mean, maybe we could have only lost 100,000 in 1 year rather than 400,000 in like 6 years of work. And so that was one: cut your losses and move on. And then a completely different sounding lesson, which was never give up. Don't cut your losses. Keep persisting. Stay in there. And we had so many stories where people said they tried to quit or they did quit at one point. Then they decided to hang in there and keep going, and then they had massive success. Well, wait a minute, these sound like opposite lessons. Well, what we learned was you've got to figure out if you're on the right path or the wrong path. The wireless internet path was the wrong path. We should have cut our losses. It's easier in hindsight than it was at the time to say that. But if you're on the right path, like if you know that you are, providentially ordained to do this certain thing, then stay in there and never give up.
A lot to think about there. Again, I like how this is applicable across the board, whether you're trading stocks, you're starting a business, you're in real estate, you invest in a bad property. Do you give up or do you keep going? How does one know if they're on the right path? Is it based on the industry? Is it based on the location? Like, what's that indicator?
I don't have an answer for that. I wish I did. But I think a lot of it comes down to gut feel. And that was one of the things we have in our, our due diligence checklist, because I think we're equipped with our brains and our gut have incredible capacity to pick up on signals that we don't typically recognize, but our brains do. Supposedly there's 3,000, body language signals that are out there that we don't know all of them. Like, if your arms are crossed, okay, so if my arms are crossed and I'm scowling, I might be able to interpret that person, as not being trusting me or being angry. But there are, another 3,000 or so things that we don't interpret, but our brain does. And that translates to a funny feeling in our gut. Don't ignore that, because, and sometimes it takes the voice of my wife for me, but at least it sounds like her voice. But seriously, don't ignore gut feel, intuition, all that. It's really important.
I think at a younger age, a lot of time, that's the voice of your parents, and
Yeah,
maybe that'll
right.
transition into a spouse later on.
Yeah.
I think that gut feeling is such a powerful message, and it's something that you need to listen to, like you said. So, someone at your point in your career, if you had to give advice to someone at my age, 25 years old, what would that advice be?
Yeah, well, I can't say this for everybody, just like the engineering smart aleck comment I made earlier, but I would say this: if you're in real estate and you are in residential, I would say this: get into commercial as soon as you can, because I really do believe, commercial level multifamily, self storage, RV parks, mobile home parks. I think there's just a different level of wealth potential there, and a lot of folks have come to that conclusion and just wish they would have jumped in earlier. Like I said, the last third of my book and a bunch of videos I've made for BiggerPockets address these 7 paths to get into commercial real estate. And I'd recommend that you consider one of those paths.
Given someone who has a interest in commercial real estate, but they don't necessarily have the capital. Maybe they do have the time to look for deals and talk to other investors. How would you suggest that they get into that commercial space?
Yeah. A couple ways to get in. One would be to be a deal finder. Like if you have more time, or if you have skills in regards to marketing, where you can do a lot of calling, postcards, emails. Emails don't work so well, but really trying to find deals, and you could take those deals to an operator and you could get a piece of the deal. That would be one way to get in, being a deal finder. Another way, which has a ton of risk with it, is being a capital raiser. Like, you raise capital for other people's deals, and you really need to check out what the SEC would tell you are your restrictions before you do that. Um, Another way is to get a paid coach or an unpaid mentor, where you go in and you just try to get somebody who's, years ahead of you, decades ahead of you, and try to work for them and learn all you can. So those would be some of the paths. One more path would be get a job. Um, I know a guy who was making 120,000 a year as a home mortgage person, residential mortgage. He took a job instead for 60,000 a year as a property manager at a self-storage facility just to learn the business. And so there's all kinds of jobs like mortgage broker, commercial mortgage broker, commercial real estate broker, asset manager, property manager, financial analyst, all kinds of jobs you can get to learn the business from the ground up.
Those are all great examples. I feel like I mixed them all together a little bit to get started. I can't suggest getting the mentor enough. That really helped me starting to work with Bill Hamill. Really launched the start of my real estate career. This
Yeah.
is the collecting real estate show. They say that you have to have three of something to have a collection. So to wrap this episode up, we have a collection of questions for you. First, what is your 1 to 2 year business goals?
Yeah, so we are starting a new type of fund here that will be investing in. It's going to have a lot more investors, a lot wider array in our portfolio. So we're trying to raise $250 million over the next 3 or 4 years from investors to place into properties. So that would be our number one goal right now.
Wow, that's impressive. And that's across the board with multifamily, self storage.
Hmm.
It's great. Number two, what is your 1 to 2 year personal goals?
My personal goal would be to learn to relax more, to get some hobbies again. I've been pretty driven and working pretty hard for a lot of years, and I'm almost 60, and it would be probably pretty wise for me to learn to slow down and relax and really enjoy life a little more, in addition, outside of work. I would say for years, well, my hobby is my work. I love it. I love writing blogs and things. It feels like fun to me, not work. Well, that only goes so far. So that would be a big goal for me.
What are some of those hobbies?
Well, I mean, that's the problem right there. I really do. I really have enjoyed work. But one thing, like, my son and I both got four-wheelers, so he's got a lot of land in the area. He buys land and timber, so we really want to do a lot more riding. We want to go up. With COVID, it's kind of slowed down our ability to go fishing in Canada, but we've really enjoyed that over the years. Um, Another thing is I play guitar and bass, and I'm just trying to decide if I want to try out for a band again and play. I played in bands off and on over the years, and so that's one thing I'm considering as well.
Good stuff. If you're ever in the Schenectady, New York area and you want to get around to golfing, let me know.
All right,
Number th-
thanks.
Number three, how can I find you and how can I assist you, as well as the listeners? How can they find you? How can they assist you?
Yeah. Well, for years, like I said, I tried to get involved in commercial real estate. I didn't know where the on ramps were. So we've created a 5-day free course for people to jump into commercial real estate. And that is available at my website. It's wellingscapital.com. That's WELLINGS capital.com/resources. And we've got other stuff in there about, how to invest in mobile home parks, self-storage, and more at that site. So that's how they can get hold of us. As far as helping us, we would just ask that, check out our website, check out those free resources. And if you decide to get a copy of my book, which is called Storing Up Profits, please give us a review on Amazon.
And what was the name of the first book again?
My earlier book was The Perfect Investment. And the second book is Storing Up Profits. And that's the one, obviously, on self-storage.
Awesome. I'll be taking a look at both. Thank you for being on the show, Paul.
You bet. Thanks, Stephen.